Welcome back to Faultline Finance Channel, $75.22. That was the Friday close for Element 47. Gold closed at $4,613.40. Commit those two precise numbers to memory, because the bedrock of our modern financial paradigm is quietly tearing itself apart. We have crossed the threshold into uncharted macroeconomic territory. Recently, silver violently shattered the psychological $100 barrier. It printed an all-time high of $116 before orchestrating a brutal retraction back into the mid-70s. Predictably, the retail masses panicked. They surrendered their positions, terrified by the engineered volatility designed specifically to shake out weak hands. But step away from the noise. Deep inside the institutional machinery, a profoundly different narrative is unfolding. Clive Thompson, a banking veteran with 47 years of high-level wealth management and private banking experience, has stepped out to issue a definitive warning. This man has successfully navigated every catastrophic monetary crisis since the severing of the gold window. His message is absolute. This pullback is an illusion. It is a mathematical inevitability that the true staggering highs are still ahead of us. It is the underlying structure that dictates the future. And before this transmission concludes, I will expose a terrifying, unprecedented anomaly occurring right now inside an elite, heavily guarded physical vault in Geneva, Switzerland. This anomaly is proof that the institutional exit doors from the fiat system are being silently chained shut, leaving the ordinary citizen completely exposed. The global markets are projecting a heavily curated facade of stability, but underneath that thin veneer, the physical gears are fundamentally seizing up. We are about to decode the most heavily suppressed truth regarding modern wealth preservation. The system relies on your blindness to the compounding structural deficit. They need you trapped, clutching depreciating paper illusions, while the architects of capital methodically drain every ounce of physical reserve. This goes far beyond standard price action. This is a blueprint for survival in an incoming era of engineered currency collapse. The countdown has started. To truly comprehend the scale of the trap currently closing around the global economy, we must surgically dismantle the psychological illusion of fiat currency. For thousands of years, stretching back long before the petrodollar framework was artificially engineered to dominate global macroeconomic policy. Element 47 was not a speculative trading vehicle. It was literal, circulating money. It rested in the pockets of the working class. It was the absolute foundational bedrock of human commerce. Within a true, unmanipulated market equilibrium, a natural state entirely free from the distortions of endless paper printing. The ratio of silver to gold historically rested between 15 to 1 and 20 to 1. These were not random historical accidents or temporary anomalies. They were the physical reality of the Earth's crust, reflecting the natural laws of sound money. But look at where we stand today. If you divide $4,613 by $75.22, you arrive at a violently fractured, highly unnatural ratio of approximately 61 to 1. This massive chasm is not merely a statistical curiosity. It is the quantifiable footprint of systemic deception. It is the measurement of how heavily the system is suppressing the ultimate economic truth-teller. Let us evaluate the conservative mathematics. If the market compresses back to the ratio level we witnessed during the last major bull run 14 years ago, a ratio of 31 to 1, element 47 mathematically must reprice to $149. This assumes gold does not move higher. But if gold returns to its recent cycle high near $5,000, and that ratio compresses to 30, silver vaults to $167. These are not exaggerated fantasies. They require no systemic collapse, no total remonetization, and no forced return to a global gold standard. They only require the market to repeat the exact same behavioral patterns it has already demonstrated in modern history. However, we are no longer operating under normal conditions. The massive financial institutions managing paper derivative markets are engaged in a lethal game of musical chairs, utilizing heavily leveraged, unbacked contracts. The ratio of paper claims to physical reality has mutated into a grotesque distortion. The moment the market realizes these paper contracts are nothing more than empty promises, the illusion of limitless liquidity will evaporate in an instant. The sovereign wealth of entire nations is presently locked inside government bonds that are structurally guaranteed to yield negative real returns as inflation compounds. The financial elite, the architects of this system, are fully aware of this terminal decay. They understand that when public faith in the debt-based fiat paradigm finally shatters, capital will violently seek the safety of absolute physical mass. The continued suppression of element 47 is the solitary linchpin holding this entire inflationary charade together. If silver is permitted to discover its true market equilibrium, it instantly exposes the devastating loss of purchasing power across every major fiat currency. Therefore, the suppression must be maintained at all costs, until the physical reality absolutely overwhelms the paper fiction. The paper market is a dam built of twigs trying to hold back an ocean of physical demand. As we shift our gaze toward the east, we find evidence that physical reality is staging an unstoppable rebellion against the West's paper-driven dictates. The gears of the global supply chain are quietly being redirected, and those who do not understand this fundamental shift will be left holding worthless paper while the tangible wealth of the world changes hands. While the Western world remains hopelessly hypnotized by the daily fluctuations of digital tickers and the endless theater of domestic politics, a quiet, hyper-coordinated resource security strategy has been activated in the East. Since the dawn of the year 2026, the Asian giant has fundamentally altered the rules of global trade. China slammed the heavy iron door shut, suddenly instituting strict government mandates requiring express permission for any export of element 47. Simultaneously, reports confirmed that China imported absolutely record-shattering quantities of physical silver in March of 2026. Restrict all outflows and ruthlessly accelerate all imports. This is not a mere coincidence of supply chain logistics. This is a blatant declaration of systemic intent. This maneuver is a dual-purpose masterstroke designed specifically to secure total technological and economic hegemony in the coming decade. First and foremost, they are aggressively hoarding the ultimate industrial conductor necessary to power their sprawling military-industrial complex and their massive renewable energy infrastructure build-out. They absolutely refuse to remain dependent on a fragile Western-dominated global spot market that can be squeezed, sanctioned, or completely disrupted at a moment's notice. They recognize that physical possession is the only true law in geopolitics. They need the physical supply securely stockpiled within their sovereign borders, and they need it immediately. But there is a second, even more profound dimension to this grand strategy that the mainstream financial media completely refuses to analyze. China is actively weaponizing element 47 as a supreme monetary hedge against a rapidly debasing global currency system. Every major central bank on Earth is currently trapped in an inescapable cycle of printing digital currency to monetize unpayable, compounding sovereign debt. The Chinese government, holding massive foreign reserves of depreciating Western paper, understands that the current macroeconomic trajectory guarantees a catastrophic loss of international purchasing power. Physical silver does not debase. It cannot be printed into existence by a panicked central committee. It cannot be digitized or artificially multiplied. Every single ounce that China aggressively absorbs from the global market, and every single ounce it legally restricts from ever exiting its borders, is an ounce forever permanently removed from the available global liquidity pool. This represents a structural redirect of unprecedented historical scale. The physical bullion that historically flowed freely through global distribution channels to satisfy Western industrial and retail demand is now crashing into an impenetrable geopolitical fortress. The East is actively, methodically draining the West's above-ground reserves. They are systematically trading their surplus fiat currency, money that they know mathematically is destined to lose its value, for hard, finite, vital industrial and monetary elements. They are swapping dying paper for the building blocks of the future economy. When the Western industrial giants finally wake up from their slumber and realize that the cheap, abundant supply of element 47 they have relied upon for decades is suddenly locked far away behind an eastern wall, the corporate panic will be unlike anything witnessed in modern financial history. The physical metal is undergoing a massive, permanent migration. And once that metal enters the heavily fortified vault of a sovereign power actively preparing for a multipolar world order, it does not come back out. It is removed from the board entirely, leaving the rest of the world to fight over an ever-shrinking pool of available ounces. This invisible war for resources is happening silently beneath the radar of the average investor. The failure to recognize this massive transfer of physical wealth is the greatest blind spot of our generation. The paper price may temporarily mask this reality, but the physical drain cannot be hidden forever. The impending global crisis violently accelerates when we examine the absolutely insatiable appetite of modern technology. The beast system of the 21st century, the infinitely sprawling network of artificial intelligence data centers, advanced autonomous robotics, the global fleet of electric vehicles, and hyper-connected military defense tech simply cannot function without element 47. As microelectronics continue to shrink down to the atomic level, the physical components require vastly more precise and reliable electrical connections. Silver is the absolute greatest conductor of electricity and thermal energy by volume on the entire periodic table. There is simply no viable, cost-effective substitute available at the massive scale and extreme efficiency required by advanced microelectronics. But the Earth cannot yield this precious metal fast enough to feed the expanding machine. The global mining sector is firmly locked in a severe multi-year structural deficit that is growing worse by the day. Every single year, the total amount of silver pulled from the Earth's crust falls dangerously short of global industrial consumption. To bridge this massive compounding gap, the market has been quietly cannibalizing the world's above-ground stockpiles. During the violent price spike to $116, a critical behavioral shift occurred within the corporate world. When global industrial giants began to deeply fear for their physical supply lines, they panicked. They completely abandoned their decades-old reliance on perfectly timed, just-in-time logistics and began aggressively hoarding physical stock. They desperately tried to secure months of forward inventory to guarantee their production lines would not freeze. This sudden manufacturer stockpiling, occurring within a market already experiencing a massive structural deficit, is precisely what poured gasoline on the price surge. And while the price temporarily normalized on the paper exchanges, the underlying terminal disease has absolutely not been cured. The global mines are still systematically failing to meet demand. The known above-ground stocks are materially smaller today than they were, and the fundamental demand curve for high-efficiency solar panels and aerospace components moves in one aggressive, unrelenting upward direction. Even if the massive global mining conglomerates wanted to instantly react to the high price signals of 2025 and 2026, the physical reality of the Earth dictates otherwise. Bringing a brand new, large-scale mining operation online takes well over a decade. By the time any new supply comes online, the compounding industrial demand wave will have completely overwhelmed whatever remaining inventory exists. The physical reality of a strictly finite planet is violently colliding with the infinite growth demands of a paper-driven market. The global ledger is bleeding red ink, the above-ground vaults are steadily emptying, and manufacturers are waking up to the reality that, in a true physical shortage, highly leveraged paper contracts cannot conduct electricity. The entire technological infrastructure of the modern age rests upon a foundation of element 47 that is cracking under the pressure. To fully grasp the inescapable mathematical trap that has been set for the global economy, we must pan out and look at the terrifying macro environment. The M2 money supply, the broadest measure of fiat currency polluting the global economy, is accelerating at a highly alarming rate. Global debt has recently eclipsed the entirely incomprehensible figure of $300 trillion. Contrast that staggering unpayable mountain against a mere $200 billion of total physical silver estimated to exist in above-ground vaults. That is a mind-bending 1,500 to 1 disparity. We are looking at an endless ocean of fiat currency searching for tangible wealth. The governments of the world are currently trapped in a corner with no viable exit strategy. Interest rates are materially higher, which mathematically guarantees that the cost to service this massive debt is compounding daily. The political class refuses to implement spending cuts, knowing austerity would instantly trigger a deflationary depression and remove them from power. Therefore, the trajectory is fixed. They must continue to borrow exponentially more currency. And when the bond market inevitably demands unmanageable yields, the central banks will be violently forced to print the difference. We saw the terrifying preview during the United Kingdom gilt crisis, where the central bank had to execute an emergency intervention. We see it happening right now as Japanese government bond yields push aggressively toward 30-year highs. But the absolute most terrifying indicator of the coming collapse is not found on a digital financial chart. It is happening right now. For over 4 decades, Clive Thompson has routinely purchased physical bullion from a premier institutional-grade dealer located in Geneva, Switzerland. In all those years, he walked in with zero friction. But this year, the entire paradigm broke apart. On 3 separate, distinct visits, he was forced to wait 40 minutes just to be seen by a broker. By January of 2026, the situation devolved further into chaos. The elite shop shifted its policy strictly to appointment only. The earliest available slot was multiple days away. He had to leave Geneva completely empty-handed. Think about the profound implication of that. A man with 47 years of high-level influence could not instantly acquire physical bullion in the financial capital of Europe. The physical metal is vanishing into strong hands. The ultra-wealthy are quietly positioning themselves, willingly accepting delays. This is the slow-motion black swan event unfolding in real time. The exit doors from the fiat system are rapidly shrinking. When the real crisis arrives, the ultimate global currency shock, it will not be a 40-minute wait or a Thursday appointment. The institutional dealers will simply shutter their heavy vault doors completely. The metal will be gone, and the public will be locked out forever. The time to protect your wealth is now, before the doors close for good. Preparation is the only defense against mathematical inevitability. What we are witnessing in real time is not a mere temporary market correction. It is the definitive beginning of the endgame. The overarching system is desperately attempting to maintain the psychological illusion of control, but the physical constraints of element 47 are violently exposing the lie. When the sovereign bond markets inevitably fracture and the central banking printing presses run white-hot to monetize the insurmountable, crushing debt, the timeline will violently accelerate. Years of slow, grinding degradation will suddenly compress into mere months, and months of quiet panic will rapidly compress into days. If you wait for the mainstream financial news networks to officially confirm the panic, you have already lost the game entirely. You will be standing in a massive, desperate queue outside an empty vault, only to be told that the greatest transfer of wealth has occurred. The historical ratio mathematics dictate the undeniable future trajectory. The unrelenting industrial supply deficit aggressively forces the hand of the global manufacturers. The structural, one-way drain of physical bullion to the east permanently alters the geopolitical balance of power forever. And the unprecedented appointment delays occurring right now in Geneva mathematically prove that the smart money is already barricading the exits. You must aggressively prepare your foundation before the final catalyst fires and the system locks down. If this deep dive transmission brought you genuine value, secure your subscription right now and share this vital blueprint. Until next time, keep questioning the official narrative and stay vigilant, fault line finance.